Well, good morning, everyone, and welcome to today's small business webinar. My name is Paul LaChapelle with Montana State University Extension, and very happy to welcome you all. We do have an opportunity for you to ask questions. There's a Q&A box down below there, and I'll be monitoring that. And our presenter today, I'll interrupt him during the presentation and get those questions answered throughout the presentation. Today's webinar is sponsored by the Small Business Development Centers, which are affiliated with the Montana Department of Commerce and the U.S. Small Business Administration, Montana Economic Developers Association, and MSU Extension, with additional support from the Great Falls Development Authority. If you have any tech support, feel free to contact me, and I'll put my email address and phone number in the Q&A box in just a minute. I'd like to now introduce today's presenter. Tom Nelson is the Regional Developer for Murphy Business and Financial. Murphy Business and Financial is one of the largest business brokerage firms in North America with 10 Montana locations. And this morning, Tom is going to be talking about strategy. Title of his presentation is Strategy Sells Businesses and It Buys Them Too. So, Tom, thank you so much for joining us this morning, and I'll turn it over to you.
You're welcome. Thank you so much for allowing me to be on. I've had the opportunity to be in front of your group, probably back in 2008 or 9, and went down at Chico for one of the economic developer conferences that you have, MEDA, I think is what it was called. So I've had that great opportunity to be there, and I've done presentations with the Big Sky office, Big Sky EDA, as well as the Miles City office. Worked with some with Jim Atchison down in Colstrip as well, and then up with the Great Northern. So I've had quite a bit of opportunity to focus in eastern Montana, and I've been selling businesses for about 11 years and have had great success. So strategy sells businesses, and of course it buys them too. One of the things that we see in business brokerage is a seller will come to me and they'll say, Tom, I need you to sell my business, but don't tell anybody it's for sale. And that's one of the awesome opportunities that we have. We are licensed real estate people, but putting a sign in front of the building at times causes issues. We had one store here in town that insisted on having a sign in the window, and she had it in the window for about 2 weeks, and everybody came in and asked her why she was closing. And she said, Tom, can I take the sign out? And I said, I never wanted you to put it in the first place. So that's some of the things that we market just a little bit differently than our friends and colleagues in the real estate world. So when an owner wants to sell their business, what are some of the things that they're worried about? They're thinking 1 o'clock in the morning, I rolled over, and now I'm wide awake. Who's going to buy my business? What's the thing worth? How am I going to find the right buyer for my company? Are they going to be financially qualified, or am I going to get the thing back? Is it possible to sell it to my good employees? Are there structures available to be able to do that? An ESOP, yeah, the answer is yes, ESOP. Which advisors do I need to help me? As business brokers, we're just a tiny cog in the wheel of a business transaction. We rely heavily upon our attorneys, CPAs, tax advisors, financial planners, and those are very key to any business transfer. How long will it take to sell my business? And then we look at it from the buy side. What are they doing at 1 o'clock in the morning? Who's going to sell me their company? Am I getting a good buy? Is it a good company? What happens to the employees if I buy it? Which advisors do I need to help me? And again, advisors on both sides are huge in the importance level of what we do. How long is it going to take to buy a business? And I'll say this, and you'll see it in an upcoming slide. Business buyers are more prepared to buy a business than business sellers are to sell. Transaction in a mirror. So to sell, think like a buyer, and to successfully buy, you think like a seller. And that's kind of the basis for negotiation. If you can put yourself in the other people's shoes, it sure helps. Sellers are not as well prepared to sell as buyers are to buy. Buyers typically suffer from analysis paralysis, and they think more about analyzing the financials than they think about running the business. Do I have the ability to run a greenhouse and nursery? Do I know how to be efficient in plant operations, in manufacturing? And then the last part is that business valuation is an art; it's not a science. There are tools in the valuation industry that give us an idea of where a transaction is going to trade, at what level and what multiple, and is it a multiple of earnings or a multiple of sales, a multiple of EBITDA. There's a number of different ways that businesses are valued. At times we have let's say we'll take a business brokerage. We're going to sell a business brokerage office, and my business with a desk, a computer, and a car, it values completely differently than a road construction company that has a lot of yellow iron. And the yellow iron is going to carry more weight in the value than my desk and my car. Attorneys and tax advisors need time to get a transaction done well. We had this year, we're about 3 days before closing. We had an offer presented in May, and it took us until the middle of July to get the legal documents written up. And once we got the legal documents written up, then we now had funding that we needed to get in line with the SBA and with the guarantees and the bank that's providing the funding. And we're in the final throes of that. So we got the offer in May, and we're set to close here in the next week or so. It's been a long process. And even when we have that transaction close, we're still going to have support that's needed. The seller is going to be involved with a buyer for a period of time, and that's negotiated in the contract. So what we're going to learn today, the reason sellers sell and buyers buy, the successful process for buyers and sellers, some real life experiences, things that have gone down, and of businesses that have sold, and why things seem to happen or don't happen when you're preparing to sell a business so that you may prepare. One of the things that I see often is a seller will choose to put their business on the market, and invariably someone comes to them and they say, "Oh, so you're selling your business, huh?" And they have no reason to say that, but that's just there. And the seller was not prepared for that question, and they begin to stumble and stutter and give away that they are for sale. When in fact, a well-rehearsed, everything's for sale for the right price, how much you offering today? And just being flippant and callous about that question puts people right back on their heels, and it makes it look as though that you're not for sale. So that's some of the initial strategy. Paul, would you put up that the Murphy sell sheet here in this, and just talk a little bit about us and who we are and what we do in Montana?
Yeah, Tom. I'll just reference folks to the file download. Won't be able to put it up instead of your presentation, but folks can just click on the word Murphy sell sheet franchise W form with form and sample text. They can download that and then just reference it as you're talking.
Okay. Great, thank you so much. So a little bit about us as Murphy. We're one of the largest companies. We have about 280 people that do what I do. We're former business owners, CEOs, CFOs, CPAs, bankers, financial planners, kind of go across the board. As a company, we've closed over 3,200 transactions, over $2 billion. That's across the nation. Our credentials for the 5-state area, we're licensed in Montana, Idaho, North Dakota, South Dakota, Wyoming by the state real estate commissions. 3 of our states are real estate. We call them real estate states. So in order to sell a business, you have to be licensed in that state by that real estate commission to sell the business. Montana and North Dakota, you don't need to be licensed, but we are. National brokerage, we're involved with the International Business Brokers Association. We have valuation certifications that go along with it, and most of our people have been senior level business management. We cover the nation. Our region office is Montana, Idaho, Wyoming, North and South Dakota. We have 18 offices in the 5-state area and about 27 people that do what I do. Right now, our position in the nation as the region, our home region of Florida is only larger than us in sales. We're in the number 2 position in sales. They have 70 people competing against our 28, so it gives us a little bit of a challenge to get that first place position, and we're after it. Why do people sell their businesses? Sometimes they're burned out. They have a retirement and none of the kids want to take over. There's a divorce or a partnership dissolution. Illness. I had a heart attack 2 months ago, and it's a prime opportunity with having a heart attack. Am I doing what I want to do? And that illness will bring about thoughts that people have that have been rolling around in the back of their mind. It will bring it to the front. We work over in the Bakken, eastern Montana, western North Dakota, and what we've seen over there is they've gone through, oil field energy is always ups and downs, and right now they're in an upswing, and there's insufficient capital to grow, and where do you find that capital, and how do I bring more capital in and maybe give up an ownership interest in my company as I do that. We have one company that we're working with. They're a hot oiler. In May of 2016, they had 4 hot oil trucks, and each hot oil truck costs roughly $350,000, $400,000. He had 4. Today, well, as of Friday last week, he has 10, and he is on his way to Houston to buy 4 more. When you look at that type of growth and that type of capital expenditure, where do you find that money? And traditional lending institutions, private equity, a potential strategic investor, those are all sources that are available for that. Achieving estate liquidity. We have the opportunity to help in that process and to bring that money to bring it out of the business and get it into an investment vehicle with a financial planner, tax advisors, attorneys, estate attorneys. And then the other thing, we've seen some of this in Missoula and also in Bozeman. We have our people, they get discovered. They have an idea, they get discovered, and they receive an offer to buy, and they struggle with, how do I get this sold and not be taken advantage of? Our small business market today, general businesses, Main Street businesses, people will call them mom and pop shops. Typically, 80% of our businesses are in the United States are less than $750,000 in revenue, and larger businesses at 10%, $750,000 to $2 million in revenue. Mid-size 2 to 30, and the larger companies 1%, the over 30 million. When we look at how many establishments there are, about 4.3 million Main Street businesses, and at any given time, about 800,000 are for sale. So about 20% of the businesses are for sale at any given time, and that working with marketing on their own through websites, or it's within the community that they're trying to sell businesses, or they they've engaged a real estate professional or a business brokerage professional. There's a number of opportunities there. Larger businesses, so of course a little bit less. Smaller and mid-sized companies, they're down. They're down at that other level there. 34,000 of the businesses on the larger companies is all we have in the United States, and 8,000 are for sale. So percentage basis, there's your percentages. 18% of small businesses sell, and 31% of the larger businesses sell. And we ask the question, why is that? And the answer is they don't follow a proven process. A Main Street business, their books and records may be in a wreck. We may have shoebox accounting that still happens. Cash comes out of the business and into the seller's pockets. We had one company. I'll just share a story on it. It's we like to sell slaughterhouses, meat processing plants, both or all three, custom, state, and USDA inspected plants. One plant that we were working with was a state inspected plant. They had amazing books and records, but one thing didn't make it to the till, and that was the sale of hides. So sheep, cattle, and hogs, it just goes in the garbage. But the sheep and the cattle hides did not make it into the till. However, the seller says, "Well, I've been paid for these, but I kept a separate ledger." And that's something that a business broker doesn't want to hear. I don't want to know that you have a separate ledger, that cash is being funneled elsewhere. And it was to the tune of about $40,000 annually that this particular plant was receiving in hide income that wasn't making it to the till. And the checks were written to him specifically. He did take copies of those checks, and he did receive value for that, but that's one of those where I needed to excuse myself from the room and let them have that conversation between the buyer and the seller. But following that proven process and being able to identify it, what Tom would advise is you need to come clean and you need to start putting your hides in the till. And it's going to be a 2 or 3 year process to do that, so you don't dump a whole bunch of money in and cause an alarm for an audit. But that's one of the things that we've seen. Restaurants and bars, excuse me, restaurants and bars are another high cash business that we tend to not see all the cash hit the till. So let's get started selling a privately held business. I've been jabbering quite a bit. If anybody has any questions at this point, why don't you go ahead and type them. I'm going to grab a drink of tea here.
Great, thanks, Tom. I'll just reminded folks you can type your questions in the Q&A box there, and I'll be monitoring them, Tom, and I'll just interrupt you if that's okay, and let you know if any questions come up.
Absolutely, that's wonderful. All right, so as you're looking at your computer screen, you see there, what are the 5 factors that you would be most concerned to know about a company that you're buying or selling? So if you just take a moment and type that in the corner down there, and then the next question, why do you see these as a key to making a good buy or sell decision? So let's see a couple of those get typed into our Q&A box down there. So 5 factors that would be most concerned about the company, and I'll start. So Jason's written cash flow, profitability. I put in some financial statements, equipment lists. What else do you think is key in looking at that? Patrick, I see is typing. Go ahead, Patrick. it's dead air. Do we like dead air? Market, customer base, industry trends. That's great. Is there owner financing? And those are all great great parts of a transaction. When we bring those ideas into a transaction, what does that look like? And how do we present a business in such a manner as though it makes sense to a buyer and to a seller to proceed with a transaction? And what is a process? Why follow a process? We reduce risk. We increase the likelihood of closing. This is what you do. We check it off on the list, and we move on to the next due diligence item. So there's definitely a strategy that's in place. It makes the business more bankable. One of the things that our economic development offices have, many of them have a SBDC, and within the SBDC, they're great resources to help a buyer develop a business plan, to help a buyer develop a funding plan and a marketing plan. And those tools, we've referred, Jason's actually worked with one of our people this last May, and we referred to that transaction, and did a spectacular job in helping her to identify an accurate business plan and be able to help that person move forward in the acquisition of that business. And in a process also helps increase the business's value to the ownership. When we look at the seller selling the business, they have a number in mind, and a buyer buying a business. Buyers don't buy businesses to give them back. They buy businesses to grow the business and to be more successful in the community. So those are important items. Preparation for the sale or purchase. Know yourself and your needs. Slaughter plants, I love slaughter plants. So I had one of our brokers, Peggy Craig, works up in Kalispell. We had a processing plant for sale in eastern Montana, and we had a buyer come in they were from the suburban Minneapolis, and they drove across from Minneapolis, across Minnesota, across North Dakota into eastern Montana. Peggy drives down from Kalispell. We show the business, and the person is thinking that this is the right business for them. And then we go to the kill floor, and we begin talking about the kill process and what that looks like and how the animal is processed. And the buyer turned white as a ghost. And the question that business broker forgot to ask Tom and Peggy, are you able to regularly kill an animal? That person was not able to regularly kill an animal, and we wasted everybody's time. My time, Peggy's time, little consequence there, but the buyer wasted their time, and we wasted the seller's time by not asking one question. So knowing thyself and thy needs. As I'm looking to sell my business, what are my next plans? As I'm looking to buy a business, do I fit within this industry, and do I have the knowledge, experience, and expertise to be able to step into this position? Valuing the business, the right information is needed for a successful transaction. We need to have employee records. We need to have leases if there are leases. We need to make sure that the property is free and clear if the property transferring, title commitments. We need to have accurate financial statements and true and correct tax returns. So as we look at the valuation methodology, those are some of the items that we need in the process. Confidential marketing plan and a search. Unlocking the best transaction at the right value. Business buyers are more prepared to buy. When a business buyer is looking on the different websites, businessforsale.com, BizBuySell, BizQuest, businessbroker.net, they're looking at a couple of numbers, and they glance quickly, and the business has to pass a litmus test. And if you spend any time at all looking at those sites, there will be a revenue that's posted, there will be an asking price that's typically posted, and there will be a discretionary earnings or a EBITDA number that's posted. Buyers will begin to see a direct correlation between the business's ability to produce bottom line revenue, discretionary earnings, and purchase price. And they will look quickly, and if it doesn't match what their litmus test is, they don't even click on it. They just scroll right past it. And then in terms of preparing an offering package, when a buyer clicks on a seller's business that's being sold, there's a few steps that they'll want to go through. One of them, the seller should require everyone to have a non-disclosure agreement or a confidentiality agreement that has non-compete language in there, so that when they share their information, that information is not used to go into competition with them. And then once that person has signed the offering package, we want to make sure that they have the financial wherewithal to complete the transaction. So asking some of those hard questions: what money do you have available? Where is it coming from? And then once they're able to show that they have the financial wherewithal to complete the transaction, to present that buyer with an offering package, which has summary information, the last 3 to 5 years financials, potentially copies of the tax return with all privacy data that's been removed, those types of things in the offering package. Once we have the offering package in place, we receive kind of a due diligence list, and as a buyer, you want to confirm what's said. Do the bank statements and the deposits reflect what the gross income of the company is? Have they functioned cost effectively? Do they remain on schedule in the process? So cost effectively and on schedule. What we're looking at there is we had one transaction that we had estimated the attorney's fees to be between $3,000 and $5,000, a very simple transaction. And we went in and the attorneys, I wasn't involved in the meeting, but the attorney presented an $80,000 legal estimate. Guess what happened to that transaction? Yep, it's gone. Purchasing negotiations, back and forth. We have a posted purchase asking price, and once that asking price, that's the asking price. It's not the market value. As you're well aware, the fair market value, it's IRS ruling 5960. Fair market value is the price that's determined by what a willing seller is willing to sell for and what a willing buyer is willing to pay. So that's what fair market value is. And trying to arrive at that number at times is a challenge. Financing and funding, there's a number of ways that we can work on the financing and the funding package. From seller financing to third-party financing to potential private equity groups if it's a larger transaction, to strategic, someone else that's in the same industry doing the same thing in a different market. So a strategic acquisition, and then there's also opportunities involving ESOPs and how to get funding for ESOPs and what that looks like. Finally, we get down to the closing and the transfer. You finish the job. We coordinating all the legal work and all the tax work, involving the attorneys and the CPAs, and then we have the post-closing matters. As you may be aware, when a business sells, typically it's an asset sale and a new entity is buying the business, and we have to fire all the employees and we have to rehire them and to do that in such a manner that we have a stable transition in the transaction. Process solves problems. So, 5 most important concerns from exercise 1, and so we'll look at that. What assets are included in the sale, client list, contracts, who are their markets and customers, cash flow, profitability, those types of things. When does the optimal business transfer process address these problems before the final decisions are made? And the answer is up front, immediately. We look at these things prior to the sale, and we help find the funding and all the skeletons in the closet we want to identify. The national business market today, owner financing is a driving force in U.S. business transactions. We're seeing probably 80% of our transactions have some sort of seller financing, owner financing. There'll be a portion of it. Sometimes it's the whole transaction. I'm aware of one transaction where 20% down, the seller carried all the paper. I have another one where the seller is carrying 20%, the buyer's putting 20% down, and we're doing SBA guaranteed financing for the remaining 60%. Many of our first-time buyers they're changing careers. They want to move to Montana, Idaho, Wyoming, North South Dakota. We're a desirable place to live, and we have seen a great influx of people, and those people need jobs, they need businesses, and they need great places to live and raise their families. The ante is up for good business information. Buyers must know the details of the business to buy and to get financing. Those of you who have worked on the business SBDC side and business planning, business planting as well. When we don't have accurate financial information, we can't get funding. Financial statement quality affects the business value. If I come to you, Jason, I'm going to pick on you because I know you. Jason, if I come to you and I bring you a shoebox full of invoices from my restaurant, and I say I'm ready to sell my business, no, absolutely. I agree. So having a solid financial management tool, QuickBooks, Quicken, whatever else. I like that, Jason. Thank you. Sellers expect to know the skills and the resources of the buyer. So when we have a buyer come to the table, the buyer will have spent quite a bit of time studying the business. They'll have received a non-disclosure, kind of a short profile of the company. We'll have had a conversation about their financial wherewithal and their ability to close a transaction. And they will have studied the business and the industry. And we'll have a phone call between the sellers and the buyers. And the seller, kind of our phone call goes out, is like, Mrs. Buyer, you've had a great opportunity to learn about this business, and the sellers don't know anything about you. So would you spend a few moments and just tell us about yourself and what your history is, kind of what your resume looks like, and why this business is of interest to you? And we begin a conversation like that. Know yourself and your needs. What's important to you and what's not. I have some businesses that are highly sales driven, and if you do not have the ability to do cold call sales, that business opportunity is not right for you. I have some businesses that are business to business focused. Printing companies or graphics companies tend to be business to business companies, and if you expect the customers to come to you, that is one type of business model. If you have to go out and find customers, that is a different type of person. fair market value, and the appropriate price. Both are must be present for a successful transaction. Any questions that we have out there? Seeing none, most small businesses are sold on strength of earnings, not on assets. A business has to be able to do 5 things when it's being transferred. It has to be able to provide a reasonable wage for the community that the business is located in. Terry, Montana has a different demand on a business performing financially than does Missoula or Billings or Bozeman. So the wages that we need in Terry are not near as much as what we need in one of the larger communities. So that's one of the things. So provide a reasonable wage for the community that it's located in. It needs to provide adequate debt service. Adequate debt service between 1.25 and 1.35 debt coverage ratios. And sometimes the banks are looking for up to 2, depending upon the risk of the business. The business needs to provide money for any capital expenditures. If you blow an engine in a truck that's needed in a landscaping business, what are you going to do? How are you going to take care of that? And does that capital expenditure, is that accounted for? It needs to be able to provide a return on down payment or return on investment. Typically, we're seeing this is where it's fun working with some people that are knowledgeable in financial investing. One of the things that we see in small business acquisition is between a 20 and 40% return on investment, return on down payment, and so you get your money back in 5 years or 3 years, depending upon what the risk you're willing to take is and how hard you want to work to be able to do that. We had one company. They bought the business in 2009. The business revenue was roughly $300,000. And they were very excited. First-time owners, they were in their mid-30s, never bought a business before, never ran anything, and they were able to get into this nice little business. And they were able to take that $300,000 in revenue with the existing facility that they had, and as of July this year, they had $1.8 million in revenue. So they did a great job in growing the company and increasing the value. So their initial acquisition was very modest, and they've grown a business now that they need help in managing and are looking for the right divestiture vehicle. And then so that return on investment that they had over that 10-year period was substantial. And then the last thing that it needs, so that was number 4, return on investment, and number 5 is we need to have a little bit of money left at the end of the year. So again, I'll go through them. It needs to provide a reasonable wage. It needs to provide adequate debt service. It needs to provide a return on down payment. It needs to have money for our capital expenditures, and it needs to have a little bit of money left at the end of the year. So that's how we look at businesses in terms of are they viable. The market method is the most effective way in valuing a small business. What do meat shops sell for? Is real estate included or is real estate not included? What do hotels sell for? And is real estate included or not included? How do you find the values? And that's the problem that we have. Where's the data source? And it's there. You can find it. Risk Management Associates RMA Annual Guide. That's one of the tools that we use. Pratt's Stats, BizComps. There's a number of resources that are available that we have to help us understand values. All right, which company do you want to buy? Here's your next survey question. Company A. look at the economic or the revenue trends, look at the debt load, age of equipment, owner's compensation, vacation, and then pre-tax income. Company B, same thing. Which one is worth more? I'm waiting for answers as I drink my tea. I'm a teetotaler, by the way. So we have one vote for Company B. Who else? So Company B is worth more. Okay? So we're looking at anybody else. Ryan, we're waiting for you. Company A, Ryan says. Great. Anybody else want to answer? So we have a couple votes for A and a couple votes for B. I'd pick Company A as a buyer coming into this business. Look at their growth. They've doubled revenue in 2 years. Ryan says room for growth. They've doubled revenue in 2 years. The downside on Company A, their equipment age is 35 years old. So in your business plan, what do you need to prepare for? The answer is capital acquisitions. You'll need to do something. Equipment's going to break. Repairs are going to be important. Owner's compensation, $350,000 with 6 weeks off, and they're making $1.5 million as they grow. Company B, we're in a declining trend. 18, 15, 12. Their debt is huge, and their equipment age is younger, so they're not going to have as much capital expenditure, but they have that debt service that needs addressing. Owner's compensation, they don't have any time off, and they're only giving themselves $100,000. So what are you going to do? So the opportunity, if you're a turnaround person, Company B has more value to you. And if you are a growth trend person, Company A. Most businesses are sold on strength of earnings, not on assets. Jason and Paul, what were you thinking? Jill says. Oh, I want to sit in a room with you guys. Looks at the bottom line. The bottom line, we're both the same. Most small businesses are on strength of earnings, not on assets. The market method is the most effective way of valuing a small business. What are our industry comps? How do you find values to maximize the price of your business? And good valuation knowledge is of actual transaction better gauges value and supports negotiations. Developing your marketing plan. So as you prepare to sell your business, what you want to have in place is an offering package that has information about the business. Its history, what are your income expenses, what are the earnings of the business. As the seller, what family benefits are you taking out of the business? I'm aware of a number of businesses that have their children on the payroll, and that payroll actually goes into a 529 college plan. It is a strategy that some businesses use, and I suggest that you speak with your accountant, CPA, tax professional as you consider those things. Sales expenses and earnings, marketing strategy, what your employees look like. Employee A has been with the company for 15 years, has a wage of $32 an hour. They are a licensed master, and they are willing to stay on with the company. Tangible, intangible assets, are there any patents or processes that are included with the sale? And intangibles, are there any developed computer programs, intellectual property, those types of things. Facilities and location. It's very hard to sell a business in Enid, Montana, E-N-I-D, and if you look it up on the map, there's two houses there, but it's the booming metropolis of Enid, and it's between Ritchie and Sydney, Lambert area. So if your business is located in Enid, it may not be as near desirable as it is in Dillon or Hamilton. The reason for the sale, that's an important consideration as buyers are looking at the business. They want to know that the seller may be around if there's questions forthcoming, or they may be bottom feeders and looking to get a business for as little as they can. And preparing a market plan that's uniquely suited to the business, and our SBDCs are great assistants in this. Confidential search. Liquidity adds values. Local buyers are a small portion of the buyer pool. We see within our industry, we're seeing about 60 to 65% of the buyers of businesses in Montana that we deal with are not Montanans. They are coming from out of state. And so we not only sell them a business, we sell them our lifestyle. And you know, there's places in Montana where I can leave my keys in my car and not worry about it. Billings is not one of them, but there's still places I can leave my keys in my car, and there's definitely something to be said about that. And Jason, I'm not going to tell you that I leave them in my car when I go to Great Falls, because I know. National search is particularly valuable. So when a business is marketing itself, they have to realize that the buyer pool may be from out of state, and how are we going to find that best buyer? And being able to have other buyers looking at it. If one buyer is making an offer, how do we have other buyers in the wings? You'll borrow my car. Thank you, Jason. Types of buyers. We have individuals who potential employees, someone who's changing careers from the banking industry to fill in the blank. Former executives. We have corporate buyers, competitors, suppliers, customers. We'd consider that a strategic acquisition. And then we have financial buyers, small private equity or buying groups. You got guys that throw together a little bit of money and they go out and they're looking for a business opportunity. Or we're working with one of those groups, or two of those groups right now. The 4 or 5 people put their money together and let's go find something. How do you find good buyers? A network of experienced brokers and intermediaries throughout the nation. And so I'm plugging myself now in our contacts. Affiliates, brokers in the U.S., relationships with business advisors in the community. I have regular coffee and lunch with tax advisors, with attorneys, with financial planners, with bankers. Those are the trusted people in our community, and a financial planner may potentially know of an exit before anybody else does, because the person is, how do I protect my wealth? If I liquidate my business, how do I protect my wealth? And what does that look like? And do the expected earnings or the expected income in the event of a sale, when I do that, is that going to help me live the rest of my life at the level that I'd like to live it at? Or am I buying another business, taking some time off? So having those business advisor relationships are important. Typically, we don't tell our bankers when we want to sell because they'll call the note. So we like bankers because they help us fund our deals. Full service brokerage firm, confidential databases, buyers, sellers. We have over 10,000 people in our databases within the state that are looking to buy businesses in Montana, in Wyoming, in Idaho, North South Dakota. Markets create value. As a buyer, you don't want to see the rest of the B's. You want to see the S and the B. You don't want any other buyer looking, because you want to get the best deal that you can get. As a seller, you're on the opposite side of the table. You want to work with as many people as you can to get the fair market value for your business. So here's kind of our what we've seen over the last, I don't know, 10 years or so in distribution companies. This is a multiples of earnings, a 2, a 1.9, a 3. So in this scenario, the third offer was the better average offer. In service businesses, it's the first one. In manufacturing, the second bid tends to be the highest, and that's more working with this on the strategic side. When we have an offer in front of us, what are the deal terms, conditions, and structure? What does that look like? Do we have an earnout that is tied to earnings, or is it tied to top line revenue? Is there seller financing involved? What is the percentage amount of the transaction? What is the interest rate that's being offered over what period of time? And is there a balloon payment due? What is the SBA guaranteed financing, and how much will they carry of that transaction? Our key employee relationships and contracts were required if we're selling an electrical contractor and we have a licensed master and 2 journeymen on staff. We want to make sure that the master and the journeyman transfer with the company, because it's the basis of the company's ability to produce revenue. Timeliness to finish the transaction, having a target date, and managing the due diligence process to get to closing. Confidentiality about the matter. When we have key employee agreements, when's the best time to have that key employee conversation? The day before closing, and having a good package prepared for them. So to say, tomorrow I'm going to fire you from this electric company. I'm going to hire you in my new entity here, and you need to be prepared for that. But here's my key employee agreement to go with that. Confidentiality, clarity of terms to all concerned, so that we don't have any loosey-goosey language, and that's where our attorneys are so beneficial in helping us to make sure that everything is clearly and properly identified. In short, take care of the details. So market's definition of a good business. Okay, we talked about the 5 things. Covers debt service, provides working capital, pays a reasonable wage, provides a reasonable return on cash invested, and we have a little bit of money left at the end of the year. Due diligence, verifying what we know is true. Document the facts. I want to touch the bank statements. I want to see the credit card slips. I want to see the expenses. I want to verify that the expenses that this business is carrying are true, and I want to have some protection if they're not. Okay, typical seller mistakes. Paul, am I good running over? Can I keep talking, or do I need to wrap this up in the next 5 minutes? Wrap it up. Keep going. All right, I'll try to do both. Failing to run the business while you're selling. The sellers take their foot off the gas. They don't run the business. They're unrealistic about their asking price. They're working with only one buyer. They're nitpicking in a negotiation. I don't want to give you the value of that cooler because failing to evaluate the buyer's personality and skills. You can't kill animals. Wrong business. You lose your flexibility. Lock your legs. On the buy side, they demand unrealistic price. They negotiate with only one seller. They nitpick. Hey, it seems similar. They overlook conflicts with the seller's personality and skills. A buyer will transition with the seller for a period of time, and if they don't get along, it's not a good thing. Incomplete due diligence, and they lose their flexibility. So having an accurate due diligence checklist is important. Financing and funding. What are the lender's criteria? Anticipate problems and opportunities for funding the transaction. The information ante is up. That's that accurate financial statements again. Preparation effort pays off, and that's I'm really thank the SBDC for all the work that they do in helping our business buyers buy business. Marketing plans reduces the lending risk. Good information speeds the lending process. Closing and transfer. We want every skeleton identified either in the offering memorandum or through the due diligence process. And we want to identify them. We want to know what it is and what the strategy is to overcome that obstacle. Documents prepared earlier support the necessary legal work, so your asset purchase agreement, your letter of intent, those type of documents help us to get through your security note and your seller financing note. Those are important, right? Your personal guarantees that are involved. So those documents are all important. Confidentiality protects our employees, vendors, and customers. Smooth closings add confidence. My job is to make sure that everybody is sick of the details and they just want to get the deal done, and that we've covered everything. And then after the closing, prepare for the legal and tax work. There's legal side, UFOCs need to be filed, any corporate documents that need to be updated, those types of things. Anticipation is the key. Stay on the scheduled, on the agreed schedule. So as you have a due diligence checklist, you have target dates for completing that due diligence. We're going to review bank statements on these 2 days, and we're going to sign off on the bank statements to income statements. We're going to anticipate future problems and opportunities, and we look forward to those, analyzing those. All right, 11:59 on my computer. Today we bought and sold the business. Hope you've gained some ideas and what it looks like to sell a business from a business broker's perspective. Process helped you prepare.
Yeah.
Go ahead, Jason or Paul.
Appreciate all the great information. Any final questions for Tom? Feel free to type them in the Q&A there. And I'll just remind you again, all the information about our small business webinar series and listserv is available at that website I posted at the top of the Q&A. Final questions for Tom? Jill wants to see slide 39 again. Any specific questions, Jill, about that slide? Looks like Jill's typing, Tom, so hang tight. Nope, yep. She just wanted to see it. So again, this webinar has been recorded. We'll be posting it on our website, and I'll be notifying the listserv as soon as we do that. Again, want to thank Jason with the small business centers, and for all of you for joining us today. If there's no further questions, I want to say thank you, Tom. Thanks again for all the great information. And Jason will be sending out an evaluation by email to the attendees. So thank you, Jason, for that.
Paul, just quickly, Paul, I know you're trying to drop off there. You guys are welcome to download the file download. They're above the Q&A box. If you'd like to see have the webinar for your file, or the PowerPoint, or to have a little bit more about us as Murphy, feel free to download those things and use them as you may.
Great. Yeah, thanks, Tom, for that reminder. Again, just highlight that file, the PDFs, in the file download, and click Download File. Tom, thanks again for all the great information and for joining us today, and for everyone else. We'll see you next month for our December Small Business Webinar. Thanks again, everybody.
All right. Thank you, guys. Have a great day.